This week could define the next major move in crypto. Bitcoin is testing key resistance. Ethereum is finally showing strength. Gold remains near all-time highs. Oil is weakening. And macro conditions are starting to shift. Today we'll break down Bitcoin, Ethereum, gold, oil, and what smart money may be watching next. Welcome to Bull Trading Signals. Bitcoin had one of its strongest weeks in recent months. But the important part isn't just the price action, it's the positioning behind it. Funding rates remain relatively healthy, open interest continues rising, and despite the recent rally, the market still doesn't feel euphoric. That's important because the biggest Bitcoin moves usually happen before retail fully returns. Right now, BTC is approaching a major psychological resistance zone. If Bitcoin breaks and holds above it, momentum could accelerate quickly. But if price gets rejected, expect volatility and liquidity hunts before continuation. And that's where most traders get trapped. The market moves toward liquidity, not emotions. Ethereum is finally starting to wake up after months of underperformance. And historically, when ETH starts gaining strength, the market begins rotating toward altcoins. We're also seeing stronger on-chain activity, growing Layer 2 adoption, and renewed institutional attention. Ethereum is still fighting to reclaim key levels, but if momentum continues, this could mark the beginning of a broader altcoin expansion phase. For now, ETH remains one of the most important charts in crypto. Gold continues trading near historical highs. That tells us investors are still looking for safety despite risk assets recovering. Usually this happens when inflation concerns remain elevated, geopolitical uncertainty increases, or markets expect monetary policy changes. And historically, strong gold performance combined with improving liquidity conditions tends to benefit Bitcoin later. The digital gold narrative keeps getting stronger every cycle. Oil had a very different week. Prices showed weakness as markets reacted to slowing demand expectations and recession concerns. This matters because oil impacts inflation, global costs, and central bank policy. If oil continues weakening, markets may begin pricing in lower inflation and potentially easier financial conditions. And easier liquidity is generally bullish for crypto. Right now, sentiment still feels cautious. And honestly, that's healthier than full euphoria. Most traders are still uncertain. A lot of capital remains sidelined, and that creates opportunity. Because major trends usually begin before the majority fully believes in them. The key moving into next week is simple. Can Bitcoin break resistance? Can Ethereum continue gaining strength? And will macro conditions continue supporting risk assets? Because if liquidity keeps improving, crypto could be entering a much larger expansion phase. If you enjoyed this update, subscribe to Bull Trading Signals for daily crypto analysis, market insights, and trading psychology. And if you want real-time market commentary and setups, join our Telegram community below. See you in the next video.